Mic check. Mic check. Alright, so what I will be doing, guys, is a simulation on Euro USD. So I'm just pretty much setting up the interface right now. We're gonna start from, let's start about January. Let's start about January 5th, 2020. Currency USD, account balance 10,000. Yeah, so this looks good. Alright, so pretty much what I will be doing now is to load the different time frames on the chart. So I'm adding the 5-minute, the 15-minute, the 30-minute, the 1 hour, the 4 hour, and also the daily time frame. So that's a 30-minute, the 1 hour. Alright, and I will be adding those time frame to the charts. Yes, so we are looking pretty good. So what I will be doing now is to change the background. So I'm actually setting up the template I use. Just a moment. Like, just removing these unnecessary. Yeah. Alright, so it should be good now. New simulation, we're doing Euro USD restored previous use data, start simulation, add time frame 5 minutes. So it is always important to actually go back and do some back testing, to test the effectiveness of the strategy you actually use to trade the Forex market. So that kind of help with, consistency and identifying the same setup over and over and over. So let's see. Alright, so add the different time frames. What I'm gonna be doing now is to actually change the template. I love to go with black and white. So that's what we will be using for this simulation. So template is black and white. Now, so everything looks good. Now, whenever you come to the chart, the first thing you want to do, before you even start to look for any setup, any trade, you always want to check if there is any high impact news in the Forex market. And as you can see here, we have high impact news, and this is based on the daily time frame. So when you go on the smaller time frame, still we just have to look for potential news in the Forex market just the same, because truth be told, you don't want to be trading the Forex market and there is news in the FX market at that point. So you want to ensure that whenever you are trading, there is no news in the Forex markets, because whenever there is news, you're gonna find spike in the movement of price, and you know the market might wick up and wick down rapidly. So just bear that in mind. So what I normally do is to start from the daily time frame. So you want to identify your most recent resistance, you know. So I'm just gonna mark off this level here based on the daily time frame as my most recent resistance, and as you can see, pretty much we push down to this, you know, resistance on the daily time frame as well. So I'm just gonna mark off this, and usually I just move over to the 4-hour time frame. So we're on the daily time frame now, so you just move over to the 4-hour time frame, and what you want to do on the 4-hour time frame as well is to just identify your zones just the same. Alright, so what you can also do is to just make adjustment to your zone. So we have a H4 resistance here. Alright, and we also have a H4 resistance here as well. Support. And we also have another level here as well, you know, and this is on the 4-hour time frame. So this is pretty, you know, this is a pretty big range. So let's check to see how much pips we got here, you know. So we have a 35 pip move here, we have 47 pip move there, and inside this range it should be about 30 something pip, you know, 35 pip just the same. Alright, so what I'm gonna do now is to move over, just making these zones a bit cleaner, you know. So what I'm gonna do now is to move over to my 1-hour time frame, and again I will just identify my zones on the 1-hour time frame just the same. Alright, so again you see that we have a 1-hour support here, and I mean, if we break the 1-hour support, the potential is there to push all the way back down to, you know, this level right here. And this 1-hour resistance pretty much aligns with our H4 resistance just the same, you know. So we can make a bit of adjustment to this. Okay, you want to make the zone as clean as possible, you know. So let's make some adjustment to this. Alright, so that should be good. And also for here, you know, that we have a 1-hour resistance here just the same. So I'm gonna bring these over to the 30-minute to see what we got on the 30-minute time frame. Alright, now looking at this on the 30-minute time frame, if price can actually, you know, break and close above our resistance here, then the potential is there for buys. So if you can break and close above this resistance we got right here, then you can look for potential buy all the way back up to this level. So let's just measure this range just to see. So this is a 23 pip range. So in order for me to take a trade in the forex market, I would need my range to be at least 20 pips. But you know, this is the market open, the Asian session, so at this point, you know, I wouldn't be looking for any trade right now. Alright, and let's look at what we got on the 15-minute time frame also. You know, the 15-minute gives weak confirmation, but you can get trade on the 15-minute time frame just the same. You can get trades. So just making my zones a bit cleaner on the 15-minute time frame. You know, say if we break above, potential buys, break below, potential sell. Alright, so just bear that in mind. Now, very importantly, alright, you want to look at your session. So again, this is 5 p.m. EST. You know, this is when the market opens. So what we really want to do is to be trading Euro USD like from 10, which would be roughly London open at, you know, 3 a.m. So what I'm going to do is to actually move up to this time and to look at the current market structure. And then based on what we got, you know, we can look for potential buys or sells in the market. You know, so as you can see, the market is in a range. Alright. And even up to the London open, we still haven't made any move. You know, so yeah, just made the screen a bit bigger. Alright, now again, for potential buys, we would need price to break and close above here. Alright, for me that is always the ideal trade I look for in the forex market. Now, so take for example, this is on the 30-minute time frame, guys. Alright, and with the simulation, price will move a bit faster because we are skipping by candles and we can actually speed up candles. So, you know, select a random date just to do the simulation on that. So as you can see here, we get a clean break and close above our resistance on the 30-minute. You know, looking at it on the 15-minute as well, we are currently above the level just the same. Let's look at it on the 1 hour time frame. This is the close of the 1 hour candle. You know, so really at this point, there is a high probability the market should continue to push price bullish. Alright, so there's a high probability the market should continue to push price bullish. And the reason behind this is that we have a low here. Alright, we have another low here at the market open, and we create a higher low. We have our resistance right here, and this candle breaks and close above our resistance. We have nice clean candle here. So you see candle like these, we don't have any problem mirroring the movement of clean candles. So whenever you get clean candles like these, we don't have any problem mirroring the movement of those candles. Alright, so pretty much what I will be looking at now for potential buys. And this is based on the current market structure. Risk, you know, let's do, can risk 1 to 2%. Let's do a 1.5% risk. So let's keep it at that. Stop loss, we can use about 15 pips. You know, take profit, we can go for about 45 pips, thereabout, you know, roughly that. But you know, at 10 pips, I always try to manage risk at 10 pips. You know, so what I would be looking for now in taking my entry, and this is what most person have a problem with. So you see that the new candle is formed now, and let's zoom up this a bit bigger so that, you know, you guys can see clearer. We have the new candle, you know, right here now. So in order for me to take a buy, I would want this candle, you know, to create a lower wick first. So for it to open, you know, pull back and give me a lower wick, and as it breaks the high of the previous candle, then I can go with a potential buy. You know, but I'm also looking at the time as well. We are 1 hour into the London Open just the same. And what you will find sometime, because there is volume in the market and we break the structure, you know, the market might just continue to push. So the other thing I am looking at now, you know, if we start to just break the wick, then I might just go with it. And, you know, could keep stock below this candle right here and really anticipate the volume to drive price up to this resistance, where we can look to secure some profit. Alright, so these are the two scenarios I base my trades on. Alright, one, wait for a top wick, and if not, and we start to break above the wicks of the candles, you know, then this is a cue that we should continue, because we would be breaking here, we would be breaking here, and also this wick here, and we have a nice clean candle here to the left. So we shouldn't have any problem pushing back up to our resistance, and we are in London Open when the euro is fully active, so you know, we should get some bullish momentum. So let's see how this will actually play out. You know, so what I'm gonna do, you know, if it starts to break above, you know, I might just go with it. So let's see how it goes. You know, so seeing that we start to break the high here. Alright, what I'm gonna do, I'm gonna enter a buy position. Alright, I'm gonna keep my stop below the previous candle. So what I'm gonna do now, I'm gonna modify my stop loss to keep it below the previous 30-minute candle, just to be a bit safe. But you know, from a risk management perspective, guys, yeah, let's keep it below the 30-minute. That's a 1 hour. From a risk management perspective, so take for example, if we start to get, you know, if we start to get a 15-minute candle to close back in the range, then at that point I'm gonna knock off 50% of the position, because the thing is, you want to keep your losses small. Alright, you always want to keep your losses small in the Forex market. You know, so once you can minimize those losses and maximize on the big move, you shouldn't have any problem. You know, so we are in the buy. And for this, I will be monitoring it on the 15 minutes. So even if the 15-minute candle wants to pull back in the range, as long as it don't break the low of this candle right here, I am okay in holding my position. Alright, so let's see if we will continue to push bullish or if this will just be a fake out for price to pull back in the range. You know, and you always have to ask yourself again, why price is leaving our area of consolidation. You know, and as I can see here, this is our balance and this is our profit right here. You know, so let's see if the market will continue to push or, you know, if it will pull back and close in the range. And again, what I want to also do, you know, to check, you know, so this is, you know, minor news. So there is nothing major here as well. So, you know, you check for news as you go along just the same. Alright, so as I can see, the 15-minute candle close above resistance. So I'm going to leave the trade just the same, you know. So let's look at it on the 30-minute time frame now. So seeing that the 15-minute candle would have come to a close, let's monitor it on the 30-minute time frame. So if this 30-minute candle close bearish, then we're going to knock off 50% in managing risk. But if we continue to push, then, you know, we can look to secure some profit as the market, you know, push bullish. So if it close back in the range, you know, you just have to manage risk. So let's see how that will go. Alright, so as I can see, the 30-minute candle just come to a close right here. We did not close back in the range, you know, we came down, create a lower wick. So let's monitor it to see if we will continue to push bullish. You know, and whenever you see we are in high volume session, you know, we break and close above resistance and then you get a candle start break the wick of the previous candle, you know, respecting the low. And even if you look here on the 30-minute time frame, what you will notice is that the lows and the 30-minute candles got respected, all the lows so far, you know. So this is an indication that the market is pushing bullish. So whenever you are trading the Forex market, always look for patterns like these when the market is pushing bullish or bearish. Very important. You know, it doesn't make any sense you're gonna jump into a buy or sell. You don't know what you're looking for. Confirmation, high volume. We break and close above resistance. We have clean candles to the left. We are creating higher lows on the 30-minute candle, which simply means that we are pushing bullish. You know, so once we can respect the low of this candle here, I think we should continue to move up. Alright, so I'm just putting my bias based on that with experience, things I would have seen over and over in the Forex market, you know. So again, if we start to close back in the range, all you have to do is to just manage risk and just leave the rest of the position to run, you know. And currently we are pushing up, you know, we are up 60, 70, you know. So let's calculate how much pip we actually move from entry, you know. So this is 7 pips, you know. So we are looking at about move stop to entry at 10 pips and try and secure some position, you know. And as I said, guys, it is just easy. The hardest thing with trading is to maintain your discipline in the Forex market. Once you can do that, you know, you should be good. And just like that, we are able to make 10 pips. Alright, this is all you have to do. Just sit down and wait. You know, so at this point, what I normally do at 10 pips, move my stop loss to entry. Alright, if you want, go ahead and secure some position. So what I'm going to do now at 10 pips, I'm going to close 50% of my position. My stop loss is at entry, and I am going to leave the rest to run. So if we continue, we can hit full take profit. But if price pulls back to my entry, the greatest thing is that I would have secured some profit and my trade is now risk free, you know. So Whenever you move stop loss to entry or you secure profit, you are actually accepting the fact that if the market should pull back to my entry, I am okay with getting stopped out. So there's no need to get upset or to try and jump back in the market or anything like that, because you secure 50% of your position, stop is at entry, the trade is risk free, you're in profit for the day. So if it run, you make some extra profit, but if it pulls back to your entry, you're gonna still be in profit for the day. Right, so as I can see, the 1 hour candle close strong above the area, and we are now approaching this resistance. So this current 1 hour candle could just be creating a lower wick to continue to push bullish. The only thing is that we don't need it to pull back to our entry, and seeing that it break the high now, there's a high probability we can continue all the way up to this resistance. Alright, and this is how you trade the forex market. There is no one way to trade the FX market. It's just that you have to find a strategy and you have to spend enough time on that strategy. Alright, and once you do that, trust me, you just manage risk. Because once you can keep your losses small and you can get moves like these, there shouldn't be any problem. So let's see if we will continue to push all the way up to our full take profit, at about 45 pips. As it relates to securing position, if this candle, start to close bearish or get resistance from that resistance right here, then I'm gonna exit the position, because really and truly, whenever you get price forms resistance at resistance, there's a high probability the market will continue to push back down. And looking at this from a break and retest perspective, just the same, we could just be creating a high now to pull back to form some form of support for the market to continue to push bullish, to retest the high here, and then we can break structure, create a new high, pull back from support, and then get some form of continuation. But as you can see, we have broken through the level and we are now pushing bullish. So if it closed back below this area, let's look at the 30-minute time frame. So if we can't break and close above, if we can't close above, then I might just exit the entire position. But if we break above, the potential is there for further upside. Alright, so seeing that we break and close above resistance, here what I'm gonna do now. Alright, this is what I'm gonna do. So if the next candle starts to break the low here, I'm gonna exit my position. Why? We are creating higher lows, and whenever you find a candle starts to break the low of the previous candle, there's a high probability the market will push in the opposite direction. So let's stick up in there and just bear that in mind. So if this candle starts to break the low here, I'm gonna close my entire position and just call it a day. But if we continue to move, we can make some extra profit. So let's see how it goes. Alright, and if it breaks the low again, I think at this point what I'm gonna do, I'm gonna close the entire position. Alright, even though I know closing the position we can continue to push bullish just the same, but the mere fact that price starts to close back below the level is an indication that, hey, we can push back down to this area where it would be pulling back to our entry, and we really don't want that. So as I can see, price is pushing bearish. So let's see if it will actually pulls back to our entry. And as I can see here, good thing I secure the entire position. Alright. And this could just be a potential break and, retest for price to continue to push bullish. So just give me a second, guys. know, so this looked like it was a bit of a break and retest, but currently we are still trading within the range. Let's look at the time. Yeah, so this is up in the Asian session basically. You know, but we took a trade, one trade, we're risking 0.5% and we made, you know, 1.3% of the account. So again, what I'm going to do is to just move on to the next session just the same. And as I go along in a different session, the only thing I'm going to do is to make adjustment to my zones. That's the only thing I'm going to do, and focus on clean candle movements to the left. Alright, so let's see if we can skip all the way up to the, you know, and looking at this currently, you know, seeing that we have a support here, you know, leading up to pre-London, even though price didn't close below the area. You know, yes, a trade like these are considered to be impulse trade, because the reason being, we haven't gotten any confirmation with price closing below the area, you know, or it looks like we have a candle that is below the area. Yes, so this candle is below the area. Alright, so we close below our support. If you look here, we have clean candles to the left. Alright, this move is a 24 pip move, so I'm just going to mark off this support just the same. And this is the 2 a.m. candle leading up to the 3 a.m. you know, NY open. The European Europe usually about a hour ahead of London. You know, so this would be their 8 o'clock candle right here opening. So I think if this candle can break its low for a second time, let's zoom up. You know, so I think if this candle can break its low for a second time, I think we can look for a potential sell for continuation to push bearish. You know, so if it breaks its low for us, alright. So I think I'm gonna take a 1% risk right here. You know, so seeing that we had a winning trade on Monday, you know, we ain't gonna risk everything we would have made on Monday. So, you know, I'm gonna take a sell. But in managing risk, if this candle starts to, you know, pull back and close inside of the range, or to break the high of the previous candle, then I'm gonna, you know, reduce my risk basically. Because the thing is, on the 30-minute time frame, we form support at support. We get a candle to break and close below support. If you look here to the left again, we have clean candle movement here to the left. What is stopping us from pushing all the way back down to this support? You know, so as long as we don't get a 15 or a 30-minute candle to close back above our support, we should continue to push bearish. Alright, and this is just simple price action in the FX market. There is nothing fancy about this. I just visualize how candles are forming and the range we are in, and clean candle movement to the left. Also take into consideration the time that I am entering the trade, you know, so with all of those combined, you know, that's more than enough confirmation to take trades for me. So as long as you don't start to, you know, close back in the range or anything like that, I think we should be okay. But if we start to get a candle to close in the range, immediately you want to manage risk. Alright. So let's look at it on the 15-minute time frame, because really and truly, I don't want any candle to, you know, just pull back in the range like that and to close against me. So you really want to manage risk. So what I'm doing now, you know, I'm just, you know, adjusting this zone right here. So if it closes back above the level, I'm just gonna knock off 50% and just leave the rest to run. But if not, we should continue to push bearish. And again, you know, you always want to check for news. So you can see here we have that CPI. Let's take a deeper look at this. Alright, so this is for the Swiss franc, France, so you know we should be okay. Oh Lord. Alright, so it was a bit too fast, but I would have managed risk just the same, you know. Still would have managed risk. Let's look at it. Yeah, so this was an indecisive candle. So if the next candle starts to break the low, we should be good. But if this candle breaks the high of the previous candle, I'm gonna close 50% of the position in managing risk. Alright. You know, so seeing that to break the low here, there's a high probability we should continue to push bearish. You know, so let's see where our 10 pip target would be. Now, so far we push down 6 pip. So I mean, from a risk management perspective, if we break here, I'm gonna knock off 50%. Because what we really need is for, you know, what we really need is for the highs to get respected. So just like this candle did not break the high here, and this candle did not break the high here, this is what we want from this current candle. To respect the high of the previous candle and to continue to push bear. So seeing that to break the low, if it breaks the high, it becomes a volatile candle, and at this point it can easily push back in the range. So, you know, if it starts to break the high, then I'm going to close 50%. Alright, so seeing that our dear 30-minute candle forms, you know, support and close back above our entry, and this new candle break the high of the previous candle, what I'm gonna do now, I'm gonna close 50% of the position in reducing my lot size. So as I can see here on the screen, we are at negative $14. I know what I am doing, and you don't need to get emotional about, you know, your money when you're trading the currency market. You just have to put emotions aside. It takes time, I can tell you that much, but you know, it comes with experience. You're not gonna win every trade in the forex market. So anybody tell you that yes, you're gonna win every trade or I have 100% win rate, lie them I tell. Straight up lie. You know, you're not gonna win every trade. So you really have to manage risk. You know, so for example now, I close $7 out of $100. You know, reducing my lot size or my percentage as it relates to, you know, my overall risk. So if this candle should push back and hit my stop loss, what do you think will happen? I would lose less than what I intended to. This is risk management in the forex market. You know, so a person trading the currency market, they just take a trade and they just sit and wait for the trade to take profit at max risk, which is okay, and they also sit and wait for it to hit their stop loss at max risk. For me, that's a no-no, you know, because you want to minimize risk, capitalize on the big moves, you know. So if it close back in the range, what I would do, I would just close the entire position if it closed back in the range. You know, and even if we get stopped out to manage risk, and I would have been okay risking what I was risking at that point. You know, and if it closes in the range, then you know that this is definitely a fake out. You know, so seeing that to close back in the range now, what I'm gonna do, I'm gonna close my entire position. And the reason behind this, guys, you don't want price to break your support close below and then close back inside your support. What this means is that this play becomes a fake out. And what I mean by a fake out, it closes outside of the range, giving us an indication that we should continue bearish, and then it closes back inside of the range. You know, so this is how you actually combat fake out in the Forex market, by managing risk as effective as possible. You know, so let's go back and look at our trade history. So overall we're risking, let's look at history. So overall we're risking $100 on this trade. $100, or yeah, risk. So we're risking 1% of the account, which would have been $100. And overall, with the two positions that to close, we lost $30. Alright? We lose $30. So imagine risking $100 and you are able to manage risk and lose $30. That's brilliant. You know, so for me, this is still a winning trade because I lose less than what I intended to. You know, I lose less than what I intended to. So you really have to be sharp with risk management and identify when the play is no longer valid in the Forex market. And let's see if price will actually continue in our direction. You know, it did. We would have hit 10 pip, but you know, I just have to manage risk and cut my trade short just as I see fit. You know, because I don't want price to be closing back above my level. Yes, I went down for about 15 pips, which was okay, you know. It's okay. Still good. But the greatest thing, we manage risk and we are still in profit for the day. We're still up 1%. We're still up 1% for the week, just the same. You know, so you always have to manage risk at every single time in the Forex market. Don't allow the market to hit your stop loss at max risk. You know, so if you do that, your account will just take a lot of damage. Alright, so let's see about the NY session just the same. I mean, we still got this range. If we can break here, you know, the potential is there for further downside. You know, so wow. So the idea was right, just the same, you know, but I just have to manage risk. The idea is right. You know, so seeing that the break and close below this level and the market is bearish, you know, this type of play is a bit risky sometimes, because the thing is the market would have give us a big drop, you know. So I think for an ideal play to take further sells, we would need a new candle to create a top wick. Alright, we need a new candle to create a top wick, and as it starts to break the low, then I can take the sell and keep stop above the current candle. So the higher it push, the better it will be. Alright, so seeing that we are farming support now, then I know the play the play becomes invalid. Alright, the play becomes invalid. But if you look at the current market structure from here all the way down, we are bearish. Alright, we are pushing we are pushing bearish. You know, so I think a better option would be for price to close below here. I take, for example, from an impulse entry standpoint, if this candle starts to break the low, then you know you can add a position. So let's see what will happen still. Oh Lord, it look like we missed the play. Look like we missed the play. But you know, let's go back. It was moving a bit too fast, but the entry would have been as it starts to break the low here. You can see we push up, we create a top wick, you know. So as we start to break the low here, then you can take the sell. But in managing risk, because this is an impulse play, if this candle starts to break the high here, then you just have to close 50% and leave the rest to run. But this was what I was looking at, but it moved a bit too fast, so that's the reason why I actually go back one candle to show you guys. So as long as it don't start to break here, then I think we should be okay. But if it starts to break, I'm gonna just close 50% and just leave the rest to run to see if we will continue to push bearish. An impulse entry in the forex market is very risky. It's a very risky play. It takes time, it takes experience to actually take these types of trades. And let's see how much people went up to in profit. So went up to 7 pips. So if it pulls back to my entry, I'm just gonna close 50% based on the fact that it is an impulse entry, which is very risky, and you really want to keep the losses small. You want to minimize the losses. So this was a 10 pip drop. So what I'm gonna do now, here what I'm gonna do. Alright, we're still in profit for the week. We're still in profit for the week. So I'm gonna move my stop loss to entry and just leave the position to run. So if we continue, we can make some more profit, but if it pulls back to my entry, then would have gotten stopped out at break even, and we'll just move on to another day. And I think if this current candle, starts to break its high again, I think there's a high probability we might get stopped out. So let's see if it will break its high or if it will continue to push bearish. Alright, so there is a 90% chance you're gonna get stopped out. Alright, there's a 90% chance you're gonna get stopped out. So let's see what will actually happen. And this is based on things I would have seen over and over in the forex market. So if you don't get stopped out, just consider this to be lucky. Trust me. And I think as a push down, I think we should secure some profit, because currently we're at 10 pip and we push down to 30 pip. Just leave it to run and see that we are in profit for the week. But guys, just don't play around with your profit like this, because if I was trading live, I would have secured some position. And seeing that we actually went up, we are now up $100, 2% within the trading week, and this is our third trading day. What I'm gonna do now, I'm gonna secure, let's do 75%. Let's do 70 to 75% of our total position. So close part, let's do 75. Because whenever you're securing profit, you want to secure as much as possible. You want to secure most of your profit, because you have to understand the forex market don't owe us anything. So whatever you get from the FX market, you just take it and just call it a day. So if it gives you 10, 15, 20 pip, take it and call it a day, because at this point we would have went up 17 pips, 16 to 17 pips, secure some position. So if it continues to run to our full take profit at about 45 pips, then we would have made some extra profit. But if not, the greatest thing, we secure profit and our trade is now risk free. So let's see how it goes. So what I'm gonna do now, I'm gonna skip to the next candle. Alright, so seeing that to farm support. Here, what I'm gonna do now, I'm gonna close my entire position. you know, and I'm just looking how the market is forming price. You know, so good thing we close. As you can see, we start to create higher lows. And this is based on the fact that, you know, we were pushing bearish. We create a low. Even though this can break the low, it forms support. Alright, it forms support. You know, so I just exited my trade and take my $100 for the day. And, you know, we just move on to the next trading session just the same. Just move on to the next trading session. So it is simple. As you can see, we manage risk well and we're up 2% in 3 days. Just like that. You know, so just really focus on risk management and try and maintain consistency with your same setup every single day. Try and focus on your same setup every single day. Alright, and you know, we still have our little zone right here, you know, a little friend. So if we break here, potential sells. If we break above, then we can look for potential buys. So what I'm doing, I'm just making this a bit cleaner. You know, so currently we are leading up to the close. You know what I'm gonna do also, I'm gonna show you guys something. I'm gonna show you guys something. Where is the ask and the bid price? Ask, show period, grid, show volume, show description. I'm trying to locate the bid price to show you guys why it is important not to trade. Yeah, both lines are here. You know, so at this point in the market, what you notice here is an increase between the ask and the bid price, you know, in spread. So you really don't want to be trading the market at this point. And for other currency pair, it's gonna be a bit higher. In all honesty, it's gonna be a bit higher. For GJ, whenever you see 4 o'clock Jamaica time comes, the spread went up, will go up to about 15 pips. Take it as I tell you. Alright, because the market is coming to a close and they are going, the market is changing session. So you're going to find an increase in spread, which is the difference between the ask and the bid price. So always bear that in mind. You know, look at this. We would have gotten stopped out if we had a secure position. So what I'm going to do, I'm going to move back up to, you know, I'm going to go back up to the London session and look at the market structure and just make adjustment to our zone. And from there, we can look for potential trades. And there is 2 ways I trade this, because you know, sometime when I'm playing Euro USD, alright, I'm gonna show you guys another thing. Sometime when I'm trading Euro USD, you know, I might use trend line. Alright, I might use trend line to identify my channel and look for a potential break and retest of the trend line to take further action. Alright, so as you can see here, you know, this is our current trend line. And we also have a down trend line as well. Price break it. Are we now pulling back to retest it to, you know, sell it back down, so we can look for potential sell to sell it back down. You know, so if it forms resistance, or you know, just maybe, let's see how it goes. And this is something that I have experience with as well. I do trade it from time to time this way, based on the fact that, you know, price breaks and retest our trend line, you know. So I think we might continue to push bearish. You know, we might continue to push bearish. Let's risk 0.5%. Seeing that, you know, it's a bit out of my trading style, but it's something that I do trade to at times, which is very profitable just the same. You know, but if I can do close above here, I'm just gonna exit the position. Because at this point it would be closing above this trend line, and I know we have this little level here. just the same. So let's see if it will actually continue. But you know, I do trade to this sometime, and as you can see, we form resistance. I do trade to the fact that we have a trend line here. Price breaks it, create a low, you know, pull back to retest the area that got broken. You know, you take a sell to sell it down to retest the low. But if price starts to, you know, close, say about up here, then I'm gonna just close the entire position. News, we don't have any high impact news. And for this, you know, I'm just looking for about 10 pips. And remember, it is good whenever the candle opens and start to push in the opposite direction. First, it simply means that it is creating a potential top wick for it to continue to push bearish. You know, so it is always, so whenever you see candle opens and it starts to push in the opposite direction, you know, it could just be creating a top wick for it to continue to push bearish. You know, so I'm still holding the position once you don't start to break above here, because as I can see, it's not a big position, or even if we farm support now, then I might just close it, because at this point, you know, the 1 hour candle would be closing bullish, 30-minute candle would be farming resistance, you know, so yeah, so seeing that it closed like this, I mean, we're still respecting the trajectory of the trend line, you know, we're still respecting the trajectory of the trend line. So we should be safe just the same, you know, but I think our overall risk could be probably about $50. So let's see. Let's see if price will continue to respect the trend line, or if we will close back above here. Because we're not risking anything big. You know, but this is based on something that I would have seen on, you know, backtest in the FX market just the same. So once you don't close above here, I start to push up in this area, then it should be okay. Oh, and look at that. And that's the runaway train. You know, so again, guys, brought to you by Trading Made Easy. You know, so what I'm going to do now, I'm going to close my entire position. Alright, you know, so this is taking a trade within a range based on using the break and retest of trend line. This is just vision. This is things I see. I know the probability of it playing out, but you just still have to manage risk. You know, so we would have made roughly 0.4%. You know, but if we had secure position here, it would have been, you know, 0.5. You know, but it was a good trade. Risky, but good. So let's see if we will continue to push bearish. Alright, and look at that. Alright, again, see that the market still continue to push bearish. Now, what I was looking at is for price to, you know, close below this level, so we can look for potential sells. We have a resistance here. So what I would like now is for the market to create a top wick, you know, possibly respecting this wick here, and then break this level. Then I can look to take a sell. Alright, and this is gonna be the last simulation. I have some stuff to go and do, but you know, just have to provide some content for you guys. So I think, seeing that we came up, create a top wick, if it starts to break the low, there's a high probability the market will continue to push bearish. There is a very high probability. So let's see how it will actually play out. Oh Lord, too fast, too fast, too fast. You know, but you guys get the idea. The entry would have been here. The entry would have been here, you know, but the drop was a bit too fast. Drop was a bit too fast. Yeah, it went up like 2 pips. You know, the drop was a bit too far. But I would have took the sell here, you know, and really anticipate the market to continue to push bearish. So let's see if it will actually play out the way I was actually looking at it. I tell it, like, trading is easy. Trading is easy. You know, so we are pulling back. You know, so if I took the trade and, you know, seeing that this candle would have closed bullish, you know, you could have just closed 50% or even wait for this candle to break here or the high of this bearish candle. Then I can say, okay, that's your cue to reduce your risk. You know, but the potential is there for downside just the same, because as you can see, we create a top wick. We haven't broken the wick here, and we are now pushing bearish. So the potential is still there. But, you know, let's move on to the next candle. So as you can see, we form resistance. And I think if this candle break it slow, I might just enter a position. I'm just saying. If it break it slow, alright, I'm gonna enter a sell. And the reason being, we break and close below resistance, we form support below resistance, then we form resistance below resistance. We came up, we create a top wick, we did not break the high of the previous candle, and we are now breaking our low for a second time. So better confirmation or stronger confirmation would be once we break this wick here. You know, so I'm going to take a sell, but as it relates to risk management, if it starts to break above here, I'm going to close 50% of the position. So let's keep that in mind. And let's look at the current market session now. As you can see, we are leading up to pre-NY just the same. So there is volume in the market at that time. So if it starts to push back and break above this level, I'm going to manage risk pretty fast. I really need price to continue to push bearish, seeing that we just form a fresh resistance. But if not, we just have to manage risk. And, you know, can just call it a day, and seeing that to break the low of the previous candle, there's a high probability we should continue to push bearish now. So again, once this candle can respect the high here, I will be holding my position, and if we start to break the low here, it will also increase the probability for further downside. Alright? And this is just vision in the Forex market. This comes with experience. So currently we'll move up to about 7.6 pip. You know, so our target is about 10 pips. Can move stop to entry, secure some position, and leave the rest to run. You know, so from a risk management perspective, if it starts to pull back to my entry, then there's a high probability I'm going to close 50% of the position. Let's check the market. You know, we have impact news here. Let's look at what we got here. So you really have to check the market for news, you know, because you don't want to get caught in news. USD, oh Lord. You know, so what I'm going to do now, guys, I'm going to do now, we have NFP. This is on a Friday. And we know that NFP is a high impact news. The previous was 120k, and they are forecasting 160k, you know. So what I'm going to do now, I'm going to move my stop loss to entry, just to be on the safe side. I really don't want to be playing around with NFP like that. So the trade is now risk-free. So the thing with NFP, slippage do occur in NFP. Alright, but this could just be the move that the market actually need leading up to NFP, and then, you know, we can get a continuation just the same. Non-farm payroll is very dangerous, but you know, you guys get the idea. So currently we are up. Let's see how much pips we are up. You know, so currently we are up 11 pips. We are up 11 pips. We are up 3% for the week. 3% in 1 week is a lot. Can tell you that. 3% in 1 week is a lot. You know, so what I'm gonna do, I wonder, you know, I'm thinking we might continue, because if the numbers are bad, that means we should continue to push bearish. You know? Alright, so this is the news. So let's see how the market will actually react to this. So this is NFP High Impact News. So if we get stopped out, it is okay. We're still up for the week. But you know, I'm just leaving it to run to see if we will get further downside. If not, then it is what it is. But let's see how it goes. I think if the low gets broken here, we should continue. Alright, so pretty much it didn't move the market. You know, we just don't need this candle to do a deep pullback. Alright, and as I can see, we form support here. But I'm just going to leave the position to run. If it continues bearish, you know, it is what it is. But if not, we can make some. I think at this point, there's a high probability we're going to get stopped out. Yeah, so we got stopped out on that. You know, and this could just be a little retest of the here for us to continue to push bearish. You know, so the market did a bit of retest, and then it is now pushing towards the downside. You know, but you get the idea, guys. You know, this is how I trade the currency market. Very simple and effective strategy. Just have to be patient. You just have to be disciplined. Take it one step at a time, one day at a time. Don't over risk on your account. Don't over leverage. Don't chase the market because of money. Just focus on learning the skill set. You have a lot of trading firms out there, and I know that most of the person in the community or in the group, they are pretty young. You know, so you don't need to be rushing the market because of money, because you want to make a lot of money. If you do that, you're just gonna start from square one over and over and over and over. You know, so just take it easy, one day at a time, one step at a time, and you can get there eventually. And you know, as I can see, we push down to our support area here, but it is what it is. So we're still up, you know, 2.49% for the week, which is pretty okay. You know, so I'm gonna call it here, guys. I'm gonna call it here. What I will be doing this weekend, I'm gonna do a simulation session on GBP JPY with the premium group, you know, and I might just post that on YouTube as well. You know, so for person, it is very much possible. Just take trading easy. You don't need to rush the process. Alright, because if you're trying to use a small account to make a lot of money, there's a high probability you're going to blow that account. Alright, take it as I tell you, take it from my experience. One step at a time, one day at a time. Focus on learning to trade properly, and then as time goes by, you can either add money to your account or get, you know, a FTMO or a funding talent or one of those accounts to trade and be profitable just the same.